Have you ever looked at the price of gold or silver for the day and just, scratched your head?
All the con?
It jumps 2% overnight or silver just falls off a cliff, but when you look at the news, nothing. Nothing huge seems to have happened. It feels totally disconnected, right?
It does, and that's because the real drivers for precious metals, they're almost never the headline story. For, say, a tech stock, you see the bad earnings report, the stock goes down, it's direct.
What's the cause and effect?
Exactly. But gold and silver,
Mm,
they operate on a much deeper level.
yeah.
It's a layer of global tension, of distrust in the system itself.
And that is exactly the premise for our deep dive today. What if behind every single one of those price moves, every spike, every sudden drop, there's a silent global power struggle going on?
A financial war.
A financial war, yeah, not fought with tanks and planes, but with economic leverage and, stacks of physical assets.
And that's the hidden story we're going to uncover. We have two main goals here. First, to lay out the almost impossible conditions that are needed for gold and silver prices to actually truly fall.
And second?
And second, to show exactly how the two global superpowers, the US and China, are quietly shaping this market, how they're trying to control it, or in China's case, break free from that control.
So if you've ever felt like this market is just too opaque or volatile, think of this as your shortcut. We're macking out the massive financial chess game that really impacts everyone.
So let's start with the absolute basics. When everything goes wrong, why do people instinctively run to gold?
This is where it gets so dramatic. Think of the whole financial world as like a giant ocean.
Okay,
When a storm hits, markets are crashing, currencies look weak, governments seem unstable, everyone just flees. They run from risk. They run from paper promises.
they're not buying stocks in that moment.
No way. And they
Yeah.
definitely don't want debt. They run to the one asset that has literally never gone to zero in all of human history.
That's what we call the survival factor. Gold has this historical guarantee built in. It's outlasted every empire, every currency, every single financial colossus you can think of.
Its value doesn't depend on a promise from a politician or a central banker.
Not at all. It doesn't need a stable government to have value. It just is value. It's wealth in its purest form.
That idea that it doesn't need a promise is everything. But we can't talk about gold without talking about its more chaotic sibling.
Right. Silver. I always think of it as gold's restless younger brother
Huh, that's a great way to put it.
because it has this dual personality that makes it so much more erratic. On one hand, yes, it's a safe haven. It reacts to fear and uncertainty just like gold does.
But that's only half of it. What's the other, more important half?
The other half is that it's an industrial warrior. Modern life, our technology, it literally cannot function without silver.
So while gold is sitting in a vault somewhere,
Silver is being actively consumed. It's in the circuits in your phone, your laptop, and it's absolutely critical for the entire green economy, solar panels, EV batteries. It's everywhere.
so let me get this straight. The key difference is that gold is held for protection, but silver is bought to be used up, essentially destroyed.
That's the perfect way to phrase it. Gold supply just moves from one vault to another. Silver's usable supply is constantly shrinking because of manufacturing.
And that sets it up for these wild price swings down the road, doesn't it?
Absolutely, because its fate is tied directly to the health of the global factory floor.
Which brings us to a really uncomfortable truth. If gold is the ultimate measure of fear, its price only really truly falls when the world feels safe again.
And genuine global safety. That's a very, very rare thing. For gold to sort of step back into the shadows, you need this perfect storm of positive conditions. It's a whole checklist.
Okay, walk us through that checklist. What has to happen for gold to lose its appeal?
First, the big one. Inflation has to be completely dead. Trending down, everyone agrees it's under control. If prices are stable, a huge reason to own gold just evaporates.
The inflation hedge argument goes away.
It's gone. Second, interest rates have to be high enough to be genuinely attractive. You need things like government bonds to offer a decent guaranteed return.
That's the competition, right? Why hold a lump of metal that pays you nothing when you can get a risk-free 5% from the government?
Exactly. That guaranteed yield is gold's mortal enemy. Third, you need a rock-solid, strong U.S. dollar, which we'll circle back to.
Okay.
And finally, global tensions have to actually calm down. No trade wars, no major conflicts brewing. When you get all four of those things at the same time, the fear that props up gold just melts away.
But getting all four of those to line up at once seems, well, almost impossible in the world we live in now.
It's incredibly difficult, which is why gold has been so resilient. But silver, as we said, is a different beast in that environment.
It's much more vulnerable.
Far more. Because it's so tied to industrial growth, the second you get a hint of an economic slowdown, silver feels the pain first. Companies stop building, they cut back on manufacturing.
And demand for the industrial warrior just vanishes?
It plummets. So if we do get that retreat in metals because the world feels safer, you can bet silver will bleed much, much faster than gold.
It's a steeper drop.
Much steeper. Gold's price is held up by deep systemic fear. Silver's price is held up by purchase orders from factories. One of those is a lot more stable than the other.
Okay, this is the perfect transition. Let's get to the heart of this silent war, starting with the role of the United States.
Right.
The U.S. government doesn't officially set the price of gold, obviously. There's no one in an office deciding the number. But our sources are clear. They control it absolutely, just indirectly.
And that control comes from one simple, undeniable fact. The U.S. dollar is still king.
It's the world's reserve currency.
And gold isn't priced in yen or euros on the global stage. It's priced in U.S. dollars. That creates a direct mechanical link.
Explain that link. How does that translate into actual control over the price?
It's just math for a buyer in, say, India or Europe. If the U.S. dollar gets stronger, gold automatically gets more expensive for them in their local currency.
So their demand naturally goes down.
Instantly. It just chokes off global demand. The U.S. doesn't have to sell an ounce of its own gold. It just needs its currency to be strong, and that puts a ceiling on the price.
The dollar itself acts like a brake, and that works hand in hand with the Federal Reserve.
Oh, absolutely. The Fed controls interest rates. Every time they hike rates, they're making the entire dollar system more attractive. They're making bonds more attractive.
Increasing that opportunity cost of holding gold we talked about?
Precisely. They don't need to touch Fort Knox. They just make holding U.S. debt the smartest, most logical place for big money to go.
But then there's the really dramatic part, this idea of paper gold. This is the phantom mechanism, isn't it?
This is the key to understanding the day-to-day volatility. The market for actual physical gold is tiny compared to the market for paper gold.
You mean futures contracts, derivative?
Futures, ETFs, options, all of it. We're talking about 100 times more paper gold being traded than physical gold that actually exists. And most of that trading happens in U.S. markets.
It's like the physical market is a small lake, and the paper market is the Pacific Ocean. So how does that give them control?
Because you can create a flood of virtual supply whenever you want. And Matt, you want to cool down the price. You can sell massive amounts of these paper contracts in an instant.
And that pushes the quoted price down.
Immediately. It drives the price down on the screen without a single real gold bar having to be moved from a vault. It's a market of perception.
A phantom market that manages the price. It completely disconnects the number you see on the news from the actual physical supply and demand.
Which is the very system that China is trying so hard to get away from. And that sets up their countermove perfectly.
Right. So you have the U.S. controlling the system with financial engineering. What is China's response?
China is playing a completely different game. The sources call it action versus talk. While the West is trading trillions in paper derivatives, China is just buying the real thing.
Physical gold.
Physical gold. The central bank, the people themselves, they are buying it slowly, silently, relentlessly. They are building a stockpile that is completely immune to that paper market leverage.
So what's the ultimate goal here? Is it just a good investment for them?
No, this is pure geopolitics. The motive is freedom from dollar dominance.
They want out.
They want an alternative. Gold doesn't rely on the U.S. government's stability or its currency. By hoarding physical metal, China is building a foundation for a world where they aren't subject to the Fed's decisions or U.S. financial sanctions.
And it's not just the government, right? The people are doing it too.
Very much so. There's a deep cultural trust in gold in China and a deep distrust of paper money. It's seen as real wealth, a promise you can hold in your hand.
So they're building this strategic reserve outside the U.S. system. But how does China's role affect silver?
With silver, China's influence is this massive double-edged sword because they are the world's factory.
So if their economy slows down?
If China's economy slows, global manufacturing grinds to a halt, and industrial demand for silver just collapses, the price gets crushed.
But the other edge of that sword?
The other edge is their green energy and EV push. It's incredibly aggressive. If China decides to accelerate its 5-year plans for solar panels for electric cars,
The demand for silver would just explode.
explode. because that silver gets consumed, it gets used up. A massive industrial boom in China could send the price of silver to the moon in a way that just wouldn't happen with gold.
Okay, let's zoom out. The sources call this whole thing the financial chess game. It's not just about money, it's a silent war for who gets to write the rules.
That's the perfect way to put it. The U.S. is fighting with its existing power. The dollar, the Fed's control over rates, the global payment systems. These are the walls of its empire.
And China's countermove is patient. It's long-term.
Very patient. Stockpiling physical gold, trying to trade oil in their own currency, building alternative systems. It's all designed to slowly, piece by piece, create a world that doesn't revolve around the dollar.
And the result of that tug of war is the volatility we see every single day. The conflict itself creates the fear that keeps gold prices high.
Exactly. The fight itself is bullish for gold. But the U.S. control of the paper markets creates those wild, sharp drops that keep it from running away completely. This isn't a fight about tomorrow's inflation print. It's a fight for the next decade of financial power.
Which leads us to the final critical question. If, by some miracle, all that fear and conflict just vanished tomorrow, which one falls first? Gold or silver?
Based on everything we've talked about,
Yeah.
silver falls first, and it will fall harder.
Because its industrial use case vanishes with any sign of a slowdown.
It's the first to go. A return to global confidence means economic stability, not necessarily a boom. So industrial demand would soften immediately. Gold will correct, for sure, but it will survive that correction better.
Because its value is tied to trust, not just factory orders.
Exactly. And even when confidence returns, we all know how fragile it can be. History shows us that when trust truly dies, gold is the last thing left standing. It's the ultimate insurance policy.
So, to sum it all up, the prices are a function of power, fear, and trust. The U.S. controls the system. China challenges that system by buying the real asset, and investors are caught in the middle.
And as long as that challenge exists, as long as that uncertainty is there, the fundamental case for gold remains locked in.
A fascinating, if unsettling, picture.
But here's a final thought for you to chew on. While gold is that steady anchor in the storm, silver is the wild card. It's the metal of the future economy.
The industrial warrior.
The industrial warrior. Because of that relentless push for green tech, for electrification, silver is the one that will surprise you, probably when you least expect it.
The real story, as always, is hidden just beneath the surface of the price. That was the deep dive.